Hey, good afternoon, everyone. Welcome to Short Verticals. Brett Crowther back with another class today, and it's good to have you with me as we get into this today. So I want to give a shout out to Cameron May. Thank you very much, Cameron May, for covering the chat. So if you have any questions as we go along, things that I cannot necessarily get to or something a little bit more off topic, please reach out to Cameron through that chat. Let him help you out. He's always good to help you. And also follow us on X. You know, we post things frequently. So mine is Brett Crowther CS, and Cameron May is Cameron May CS. It's like Charles Schwab, right? So please follow us on X, and just it'll be a way that we can keep in touch in between classes each week. So we got a lot to cover today, as always. Things have shifted since we talked last week. Last week there was a whole bunch of trades, and we ran through just a slew of them, right? This week a little bit different, but I'm going to get into that. First off, though, before we get into a lot of the discussion of the topic today, let's cover some disclosures. So give me just one moment to cover these. So do note that options do carry a high level of risk and are not suitable for all investors. Information here is for general informational purposes only, should not be considered as a recommendation. Paper money is for educational purposes only. Short options can be assigned at any time, regardless of whether they're in or out of the money. Investing does involve risk, including loss of principal. Past performance may not be a guarantee, or no guarantee of future results. Also, here is the definition of your option Greeks. And then another one is stop losses are not guaranteed to execute at the activation price. It can change. And we don't use a lot, but just different things, even some targets and stuff. Anytime it's turned into a market order, things can change. So be aware of that. It may not get the feel that you desire. Okay, now let's bring up Thinkorswim, shall we? Let's take a look at what's going on, and I'm going to talk to you about what we're going to be covering today. And so we're going to look at the SPX. We're going to look at the overall market here and determine what's going on. As I mentioned, we had a lot of things going on last week as far as potential trades. This week it's a little bit different, but one of the things I talked about was wanting to get through some searches. And so we're going to look at the overall market. We're going to talk about our positions that we had last week. We're going to talk about managing those positions. Do we take profit? Do we, cut losses, depending on what's going on? And then we'll look at some searches. And I also, in between, I mentioned, hey, leave some comments. Well, I appreciate the comments. Mickey did throw in a comment that asking about the price pattern searches. And so I do want to address kind of the pros and cons of that search as we talk searches today in the short verticals. Okay, so we'll look at that. So hey, I just want to welcome everyone. Will, Ricebird, Mohammed, Speak Truth, Richard, how you doing, Chris, Michael, Kung Po. Hey, welcome everyone. Good to have you aboard today. Okay, so let's talk about what's going on the overall market. Now, this is interesting. And, here we have a symmetrical triangle that was forming, right? You can see how it's coming up and coming down. And some of the conditions of those symmetrical triangles is generally a symmetrical triangle. In fact, maybe I would zoom it in just to the back here, is it can be a pause in an uptrend or a downtrend. And generally, it's a continuation pattern, meaning it should break out in the direction of the prior trend. And since this was an uptrend leading into the symmetrical triangle, it would be anticipated that it would leave as an uptrend coming out of it. Now, that's not always the case. It can reverse, but that's kind of the idea behind that price pattern. And then as we look closer at the price pattern itself, let me kind of widen this out. They talk about when it breaks, it should go the distance of the width of the support and resistance. Well, the problem with the triangle is, the width alters, right? Depending on where we look at it. It's not the same spot. So if we, we're to look at the width, right, hold on a second. Let's see what's going on here. Okay, we'll do this. The width here is different than the width here, right? And so which one is it? Where is the width? And so this is where different technicians will look at it differently. Some will say, take the widest point. Well, this could be the widest point. Some will look, at this point. And so as a way what happens is sometimes you get these really, really wide triangles. And so when you do that, that widest point can be kind of exaggerated, right? And so a lot of times look for the second hit. So this would be the first hit. Let me actually delete these. So this would be the first hit. This would be the second one, because that's kind of like, okay, now we got one on each side, the third and fourth. And we actually need two on each side, right? Two on the top, two on the bottom to actually make it so we can draw a line, two spots up there, two spots down here. And so as I look at them, go through it, hey, like to look at it here. Again, you can do what you want, but I look for the width of the number two, right, where it hits that second. So we got a hit on the bottom, top, and the hit on the bottom, or vice versa. We have kind of a anchor point for the, resistance and anchor point for the support. Okay. So that's where we're looking to go. Now, again, I mentioned that this could be a pause in the overall uptrend. And so that could be, it could break out and run higher from there, but this would be an initial target, whatever that distance is, right? And so one of the things, let me just delete these. One of the things people might do is let's draw one actually from this point to there. Let's draw that width. Then we'll duplicate that. And then we're going to add that to the breakout point where it broke out. Now, I want to talk about this breakout, though. I think it's a little bit interesting. And this will give us an initial target. So something around the 78, 72, somewhere up in that ballpark would be, based upon the price pattern, would be a potential area of resistance or some sort of target is up in this ballpark area somewhere here. Okay, but here's the interesting thing about this is this isn't really a solid breakout. I mean, if we look at this, we didn't have like this really strong candle running through, breaking through resistance and, continuing to run up. It almost, it broke above it, but it almost kind of drifted through it and just kind of drifted sideways. And so it doesn't have a lot of energy behind it on this move. And there's a lot of stocks that kind of follow suit where yes, they're moving higher, but they're not doing really well. Or there's some stocks that are just kind of pulling down the market, and there's a little bit of a mix match of those, the up and down. And so it's kind of inhibited it from kind of breaking out and making that strong move to the upside. So yes, there's a breakout here. Technically not the most solid of a breakout, right? It's like it's kind of drifting out there instead of actually breaking out, if you get what I'm saying here, saying it really kind of punched through that resistance area, just kind of peaked above it and then kind of drifted out there. So technically it's a breakout and not the strongest one, but that's what we see going on right now, right? Okay, so with that in mind, we look at some of the other indexes. We got the NDX. This one, not so strong, right? It kind of had that same support resistance winding up here. But one of the things I'm seeing here is if I were to activate this and kind of pull this out a little bit further, I want to kind of talk about this because this is important. Activate this one as well. Okay, this one could have broken down, right? But also one of the other issues is it got kind of long in that pattern. Here's another thing on any of these symmetrical triangles, ascending triangle, descending triangle, any of the triangle patterns. When it gets more than about 3/4 away from the beginning to the apex, the validity, the idea of that pattern is kind of waning, right? Ideally, technicians will say it should break out before you get about 3/4, 2/3 to 3/4 away through the actual triangle. And so some might argue that this one is kind of falling apart anyway, just because it's more like it's just kind of drifting out, and instead of breaking down, it's just kind of drifting out the side. And so we're actually seeing kind of some conflicting things here. NDX breaking down, but is it just kind of drifting lower? SPX breaking up, or is it just kind of drifting higher? You see what I mean? There's not a lot of energy, not a lot of strength in either direction on there. I mean, the other one we could look at is the DJI. Let's pull up $DJI. Looking at Dow here. Whoops, we'll put $sign in there instead of that. Here we go, DJI, and boom. And this one, this one has been moving higher, right? We see some more of that upward action. And so generally speaking, we got a major index going up. We got one kind of drifting lower. We got another one kind of drifting higher. It's still going to leave us this overall neutral to bullish stance as we look for potential trades. And that's the whole reason of going over this, is to help us gauge, okay, what should we be looking for? Because we do want that wind in our back, right? If we're cycling, we're sailing, whatever it might be, it's always nice to have the wind at your back, even though you can still move your direction with the wind in front of you, but it's a lot more difficult than having the wind at our back. So that's what we're looking for, is the wind in our back, okay? Pushing ourselves along. So with that said, we're going to be looking for something on the upside as we scan and kind of go through things. But let's also now take a break and move over to what happened last week. Now, last week we went through a lot of charts and we placed several trades. I want to kind of walk through them here for just a minute. And so I'm going to pull up ANET. So ANET, this is interesting. This one was looking good. We got in here, what was it, the 9th? And so this one, here's the thing that it's always good to know, that things don't always work out perfectly, right? And this is why we position size, because this was a nice solid breakout. That was a solid run, a big candle. And, it really, the bulls opened and closed the day, just pushed it higher. So from a technical standpoint, looking pretty good. And so this is where people tend to think, oh no, this is a better looking one. How about I put more money on that one and, make a bigger gain, right? Well, that's always good until it doesn't. Now it's kind of pulled back. and possibly, is struggling a little bit. Now the question is we're a little bit below where we want to be at 175, right? That's what we sold. It was 175, 170. We brought in $1.70 for that. And are we able to make this back up? Because really there's going to be movement in here. Could it possibly be that it's going to, let's extend this to the right? Could it bounce off this long-term support level? Yeah. So technically, there's probably some things to say, okay, it didn't actually bounce where we want it to, either off of the old resistance, possibly making a new support, like a breakout retest, move higher. Not doing that, but there's still some support here. We have the moving average, which could potentially, it doesn't look like it obeys it real strongly. This is a 50 period moving average. It doesn't really hold tight to it, but there's some potential there. So there's a couple things in here. So we're going to let that ride. Besides, we're almost getting like a hammer bottom, right? And if we get an upward move tomorrow, that could actually create a morning star. So we'll give it another day. If not, on Friday, might look to exit that trade depending on where it goes and if it can break through the support or if it does bounce higher. So, and this is the good thing is about these verticals is it gives us some flexibility. It gives us some breathing room, it gives us some ability to just kind of wait things out. Now, the other thing on the downside of that is we're going to make some move stronger direction. We don't necessarily capitalize and get all the profits, right out of the gate, right? It takes time to develop those profits. We're waiting for some time decay to come in. Speak truth, interesting dynamic with seasonal summer low volatility and the Iran conflict high volatility potential. Difficult to pin down a midterm trend for traditional short verticals. Yeah, there's challenges in it. Definitely some challenges. That is for sure. All right. Okay, so that's one. We're going to leave that one be. So again, managing the trades, and this is always important. It's not just about getting in the trade. It's how you manage them and when you exit, it's position sizing. All those things are key components of putting this whole puzzle together, right? I mean, it's one thing to get in. It's another thing to get out. It's another thing to make sure you got in and out with the right amount. Let's look at another one. Hey, Oracle isn't working the way I wanted it to. Oracle is a different beast because it really hadn't bounced. I mentioned this in the class, and I use this more as an example of I put on two different trades. I put on a short put vertical, and I also put on a long call vertical, both bullish trades. I was going to illustrate some of the differences between them. Where was it? Well, this is another argument kind of going back to waiting for the close. Where does it end on the day? Because I mentioned this was a long-term support level. This has been around for weeks, if not years, right? This is a long-term support level that's coming back up against. And when we're looking at this in the class, in fact, we were over right here. I'm going to zoom in on this just so we can really kind of focus on exactly what we need here. But when we were looking at this in the class, well, it was up here. It's a little bit higher. It's looking a little bit better. So it gave the appearance it's going to, kind of bounce off this general area, off the support. And remember, support and resistance is not a finite line. It's not, 145.38 or something like this. It's this general ballpark. And so that's what I'm saying is around this ballpark is where support should be and is looking higher. But at the end of the day, it came back and it closed lower. So if you look at it at the end of the day, it's not looking the same as when we saw it in class and we still had, an hour and a half to go. And a lot of times that first hour and a half and that last hour and a half, is where a lot of action comes in. In fact, oftentimes you look at the volume throughout the day, it'll spike at the opening bell, then it'll slowly drift off, and it'll be kind of a lull in the midday, and then it'll spike again going into the close as more activity comes in, so that you can get a lot more volatility or action at the open or the close. And this one drop back down. And so it didn't necessarily give us the, had we looked at this at the end of the day, we probably would have taken a different action. So again, end of the day matters. And then since then, it's kind of dropped down. So not able to share what I wanted to share with that. But actually, let me show you some things I think I find interesting on that trade. So let me go over to the Analyze tab. And after that, I'm going to bring up Oracle. And if I come down here, and you can actually show, simulations, all thing, hide positions, whatever. I want to show all, and here are the two trades that we had. We had basically a bull put spread or a long short put spread where we sold the 140, bought the 135. So it's this trade right here. And that expires the 7th of August. And then we had another one, which was that call spread where and I was really saying, hey, this is almost like if it runs and it runs hard, we could make some money on that. But if it doesn't, the time decay is going to eat us up and stuff. And so we bought the 155 and sold way out of the money 185, way up there to help soften that time decay element, and take away some of the angst if it doesn't make that move. And in that sense, it's kind of worked out. So let me actually walk through each of these. And how they kind of play out. So like here's this one. So I'm gonna select the top two legs, all right, which is the August 7th. And I also want to make sure that my expiration is matching that. And so here's the expiration, the August 8th is when that's going to expire. And if we look at our risk profile, again, this is where we have max loss. This is where we're making some sort of gain loss. This is max gain. Right here is break even. And that lighter gray, this is the area that the stock is expected to move between now and expiration, or August 8th, right? So if we look at this, we can move this over to maybe break even or something. There's still about a 27% probability it's going to be up in that area. And, just even for a break even. So there's some potential there, right? It's lower, but there's some potential. Now compare and contrast that to this one, where if we remove that to the break even, and we got to change the date now because this one's a little bit longer, right? So this is August 21st is when that one expires. So let's go up to the dates. Let's go up here. We're going to select the Saturday after because that's when the official expiry is. And look at the gray area where this is expected to go through. It's going to stay in the max loss the whole time. And so it really isn't even expected to get up to the break even, let alone get up to where we can make a max gain or anything. So this one has actually taken a real dive. And so from a technical standpoint, it's brought kind of falling apart. But also, if we bring in just a strictly probability analysis, there's not a lot of hope for this. And so we're going to go ahead and remove this one. I'll leave the put spread on there, but I'm going to remove the call. And we may say this is a total failure, but it's not. And this is what I want to show is what happened here is this trade, if I just move it to, where's the stock at right now? It's at 126. Okay. If I move the stock to, I don't want to move up 10%. I just want the, where is it now? Okay, so I move 126.27. This one has lost $531. That long call, all right? $531. And so that's kind of a hit, right? But that short call has actually made $154. And so that means that it's going to take off some of that bite, the overall loss, instead of being 500 and some odd dollars, is only 377. Now is that great? No, it's not great, but it sure helps, right? And so actually it did a pretty good job. It took off 25% or more of the loss that we had. And so it did help out in that sense. And so let's go ahead and get rid of that. So I'm gonna go over to the trade tab, pull open those. Actually, the easiest way is go to the monitor tab. And oh yeah, let's do this. And I'm gonna grab these two down here, and I'm gonna create closing order, and it's going to give me some options here. I want to sell the vertical August 26, 155. Yep, that's the one we want right there. Or each leg, we want the whole thing. I'm just going to go ahead and get out at the market. So just say, go ahead and fill that, and go ahead and close that one out. All right. Now, we'll talk about the other one later. Now, I'll take another opportunity down the road to actually look at comparing, hopefully another one that goes our direction, bull put, and or should I say a short put spread and a long call spread. Let me just look over some of the questions. Unbalanced volume, selling pressure, market forecast, triple. Okay. All right, just a couple of you guys. I don't know if I'll be able to get over to that one, Lloyd, but let me see what I can do. And thank you, Sam. Yeah, there's different technical indicators we could look at, and some of them aren't looking so good. Again, last week we were anticipating a bounce. It actually didn't bounce. We actually never got a signal, so just kind of be aware of that. Another one, though, that we place a trade on is Apple. And so Apple, we sold two contracts, 300, 295. We sold those for 165. And so it has made a move, a pretty good move in the direction that we anticipated, right? Yay, thank you, Apple. And so the question is, can we get out? And, we could, there's a couple options. One, we could just let it go and, expect it to expire worthless, but we still have quite a bit of time. And in fact, what do we have here? Till the 7th. So we have about, 3 weeks till we get to expiration on that. So there's some time for this to come back. We need a little bit more time decay maybe to work out. But let's just see, if we're looking at $1.65 is what we sold it for. Let's times that by point 0.2 or 20% to say, okay, what would the value be if we collected 80% of that $1.65? And that's how you do it. You take the $1.65, you times it, whatever you brought in, you times it by point 0.2, and that'll give us the 80%, right? And so we get 33 cents or $33 per contract is where we could walk away with most of the gain. And some traders will look to actually take the profit around the 80-90% somewhere in there, because that last little bit can hold on forever until it almost gets to the expiration. And so that's where they like take it off the table when you have most of the gain, when there's very little bit to gain and a lot risking on it. And so let's do this. Let's go ahead and see where we're at as far as how much that profit we can make on an Apple. And so going over to Apple, let's go over to our monitor tab. Let's go to our activity and positions. There's Apple right there. I'm going to right click on that. I'm going to create a closing order. And so at 44 cents. And so we're not quite there right now. Now, one thing that we could do, what did I do? Did I do analyze? I apologize. I didn't want to do that. One thing that we could do is create an order to get out if it does, in fact, hit our 33 cents. And so I could buy that back. Let's go ahead and click on this and say, you know what? Let's go ahead and buy back those two contracts at, I'm going to leave it as a limit, saying we're going to pay this price or less. Let's even just drop it down to 30 cents and get a little bit more, than that. And so we're limiting it. We're saying we're not going to pay more than 30 cents for that, but go ahead and get us out. And then let's change this day till good till canceled so that it's in effect for more than just today in the closing bell. I'm going to go ahead and hit confirm and send. Check that out. Okay, buy that back. And then we're good to go. Send that off. And now I just put a target order on that. Okay. One more to look at here. We have, what was the last one in it? Oracle, AVGO. Is that right? Oh, not AVGO. Oh, PANW. Let's see. All right, here we go. So here's another one. August 7th, we sold the 320, bought the 315, put vertical. Let's move this over so we can actually get it in the picture here, huh? How about that? For a 220 credit. Now this one came back, let's see, I think we were looking at some Fibonacci's, looking for potential pullback bounce, and just basically ran up, made a move, and it's been doing all right. It's doing what we want it to. But let's just check how close we're getting on that one, just to see how it's doing. And so 220, we're going to take it 220, we're going to times that by 0.2 to get 20% of that. And we're at 44 cents on this one. It happens to be the same number that we were looking at where we clicked on the Apple. So we're looking for about 44 cents. Buying it back at 44 cents would, give us most of the credit that we received, at least 8% of it. Let's go see what we can get for it right now. So I'm going to come over to the PANW. I'm going to right click on this. I'm going to come down to create closing order. I want to buy those three contracts back. What are we going to get? $1.25. So not there yet, right? We're still quite a ways away. We need a little bit more bullish movement and a little bit more time decay working in our favor. So I'm not even going to put one in at this point. I'm just going to let it ride for now and see where it goes. Okay. All right. Let's see. Let's see if I'm missing anything. That looks like we got. There's a question that comes up that I would just want to address about like the rolling strategy. And I did a class on this not too long ago about rolling, and rolling's fine. I'm not going to say it's bad, but I do want to make sure everyone understands what's happening. Rolling is nothing more than buying something back and reselling something else. And so like this Oracle trade, I said, oh, hey, this one's not looking very good. How about we create that rolling order? Well, let's see, did I get the right one? 140, yeah. So create rolling order. So we'd get rid of this one and enter into another one. So it'd be basically buy this one back and sell the other thing. It doesn't save us anything on commissions. It actually does all the commissions, just like as if, we said, get out of this position, get into a new position. It just puts it all together in one order is really what it does. But what people often look at is they say, hey, look, I can do this and I can, sell it for, another a little bit of income or something. And while that can be true, what happens often is they take tomorrow's profits to help pay off today's loss. So for instance, if they're, they got into a trade hoping to make, a buck 50 on this trade and it went south. Now they're down, it's down, they have to buy it back for 250. Well, then they go out and roll that. They take, $3 that they can sell it for, pay off the loss on this one, 250. Actually, I'm messing up my numbers here because we already had the initial credit. But here's my point: is what will happen is if you're losing, let me say it this way: if you're losing $100 on this trade and you go and roll it for, let's say, $3 on another trade, what's happening is it'll show a credit of $2, which, so you're thinking, hey, there's money coming in. However, you're using tomorrow's money to pay off today's loss, and so the risk is getting greater on tomorrow's trade. I've got to be very, very careful. Just make sure we understand that's what's happening. It's not just free money. It's the risk is increasing, all right, on those trades. So be very aware of that. And I don't have time to go through all that because we have other things to do today, but I just want to bring that up. All right. But I did want to talk about searching, because when we were doing a search, or when I brought up last week, there were all kinds of setups. There were so many that we couldn't even, we did as many as we could during the trade or the class, but then we couldn't take them all because of time restraints. However, this week is a little bit different because we're getting into earnings season, and that's changing things. And so as I go through and typically look at the stocks I have on a list, well, I found earnings, earnings is messing it up. And so I want to just talk about a scan that we could potentially do to go out there and possibly find something out there. Okay, so let's talk about some conditions that we want as I go over to the scan tool on the Thinkorswim software. And so let's go ahead and add some filters here. So the first one we're going to do is we'll just do a stock. And what I'm going to look for is the ask price. I'm going to put it in a minimum of about 75. And why 75? Well, basically, when you start getting these, we could do 50. I like to start, but really what happens is I'm just looking for something to give a bottom, because if you start getting into like stocks that are $20 or $30, you'll find there's just not a lot of movement, not a lot of premium in them at times. It just gets to be, it just helps weed out a lot of things that just aren't going to make it because they don't have a lot of volume. They don't have, and there can be stocks that have volume down there, but I'm just saying it helps weed out a lot of them that don't have a lot of the criteria that we want by just staying above, a certain threshold, 50, 75, somewhere in that ballpark. We can start with 50. If we have too many, bump it up to 75, but not necessarily worried about a max. Yeah, you might get some in it, and there's like, a $1,500 stock, but there's not a gazillion of them out there, so it's usually not too big of a problem, all right? So that's the first thing we're looking for, just saying something like, let's get something that has a fair amount of value in it. The next thing I'm going to do is add some volume, and so I'm going to add filter again, and this time I'm going to come down to study, all right? And click on study. And it pops up over here where it has a study and the ADX crossover. I'm going to drop that down, and I'm going to go to volume and do average volume. All right. And I'm going to say, okay, how much average volume do I want on this? And this is saying for the last 50 periods, let's go 30. Let's go just about a month's worth. And we can leave this right here at 1 million. Say we want that average volume to be more than 1 million. That's a good starting point, and then we can adjust that up or down as needed. But the whole idea behind the volume is that the more volume you have on the stock, the tighter the bid-ask spreads tend to be on the option. All right. Now that's not always the case, but as a general, it helps filter out some that just have really wide bid-ask spreads, because obviously the more activity it has, the tighter those bid-ask spreads tend to be. And so when you have less activity, they tend to widen out. So you just want to use something to help us find stocks that will hopefully be tighter, right? And so that's the idea behind that. Now we can go ahead and scan this. And what do we have here? We have 88 stocks. So that's something we could look through. But in fact, let me go ahead and throw these into a watch list. And so I'm just going to click on the pancakes, or three lines over here, click Save Watch List, and then I'm just going to say this is our short verticals of 716, right? Just so we can go find those. And then what I want to do is go back to the charts, and then I have these linked, this watch list over here. So I have the red number 1 and the red number 1. And so I'm going to come up here and select from our personal. Where is that one? There it is, short verticals, 716. So that is the watch list we just barely created. And we can start running through this, right? Now what we're going to see is, this is what I was talking about earlier, earnings. Oh, that one just happened. There's one that's a potential. Or is that earnings just today? This is before markets. That one was just barely made it. But a lot of these earnings, right? Next one. That one's okay. But we're going to see a lot of earnings, right? Like every other one has earnings. And so that's becoming an issue, as we go through here. Earnings coming up, they don't have the exact time yet, but um, a lot of earnings are getting in the way of this. And so here's one, again, earnings. So what we can do is uh, modify this search, the scan here, to help us deal with those earnings and hopefully kind of shave those down. I'm not able to share this, but it's simple enough just to watch what I do, and you can create it on your side. Okay. So the next thing I do, I'm going to make it real simple. I'm only going to add three criteria. So it's the ask of $50 or more, the average volume of 30 period above a million, and the last one that I want to do is add one more filter. So I'm going to come back up, hit add filter, and again go down to study. And so the first one I did stock, the next two. So right here, this is under stock. The next two are going to be under study. All right. And I'm going to come over again to where it said ADX crossover, but this time I'm going to change it to corporate action, and I want to select earnings. And oh, wait. Stop. Hold the horse. Actually, I want to do one more thing. I'm going to leave these two up here with all the following. I want everything I'm putting here, I want, right? I want to exclude the earnings. I want to say, but find one that does not have earnings. All right. So I want to make sure I do this under the none of the following area. All right. So let's do this. Let's come over and add filter there. Well, I'm glad I caught that. Down to study. So same thing I was doing before. Down to study. Then from there, select corporate actions and earnings. Everyone with me here? So we had our first two up here. Then we're going to say, make sure this does not happen. And we're going to say this stock does have earnings anytime in the next, now that's 10 bars. And so if we look at a daily bar, we're looking at next 10 days or basically 2 weeks. Let's throw in 20 in there because that'll essentially be, 4 weeks worth, right? So we don't have any earnings coming up in the near future, right? And then, so basically this is what we ran before. We're just adding this one. We had 88 before. Let's scan it now. And what do we have now? 27. So you can see out of the 88, it took, what, 50 of them out because they had earnings coming up within the next couple weeks. And so this will really help us to drill down on that. And then we can, again, save this as a watch list. Then we do say no earnings, right? Whatever we want to call it. Earnings, move my mouse cursor here, 716. And now we can do the same thing. I'm going to save that, go over to our charts, and now go and say, go to personal or short verts, no earnings. That's what we call it, right? And now, as I look through, I can start looking through and saying, how's this one setting up? How's this one setting up? How's this one setting up? And we should just be past earnings. If they do have earnings, it should just be past it, or just at least not. Well, that one looks like it's still coming out. That's weird. I don't know if it should have excluded that. Yeah, just got done with it. And so a lot of these will have earnings or just past it. Okay. And so hopefully that'll help you, understand a way you can go out and scan for potential plays out there. Now, another thing came up, a question came up, and I always mention, hey, if you have questions in between classes, put them in the comments. I read them. We'll address it next class. And one of the things that came up is last week we were talking about some price patterns. And by the way, speaking of price patterns, let me grab something here. Let's see, where is it? Let me pull this over. If you go to our Trader Talk homepage and we have those shorts, I'm actually doing a series. I just did a series about candlesticks and textbook versus reality. I said, okay, you always see like this is what it should look like, right? And then you go out on a chart and you're like, it's nothing like that. They don't look like that in real life, right? They don't set up picture perfect. And so I explained, okay, what should it look like, and then what does it commonly look like on a chart? And I did that through a whole bunch of candlesticks, and now I'm starting to move into price patterns. And so go out and check out those shorts. In fact, I just did one double top textbook versus reality, and so I broke down double top. I'll go through double bottom, triple top, triple bottom, head and shoulders, symmetric triangles, flags, cup and handle. I mean, I'll go through them all, right? But I'm going to release one a week. But go check those out because they're 180 seconds or less, right? They're very quick. But if you have any questions on those price patterns, as I deliver these, and go ahead and check them out. And also subscribe to our channel while if you have not done so, subscribe. It really helps us out. And also like the videos. That helps us know this is what you like, help us know and make more of those. And also it helps us in the algorithms, which enables us to continue to make these. So please check those out. But the question came out about the patterns. Can we search for patterns? The answer is yes and no. I know that sounds weird, but let me show you what I mean here. Okay, so like let's go back to that scan. I'm gonna do something else. You can come in here and say, okay. In fact, let me just exclude everything. Let's kind of reset this. Let's take all this off. I want to show you something. Take all this off. We could come in here and add a filter and say pattern. Look for the pattern. And on these patterns, it says, okay, well, which ones do we want? We can select for a ton of them, an absolute ton of them. But let me even just go through and just check. Yeah, like if you look for falling wedge and rising wedge, I'll tell you, it's going to find everything out there because it interprets everything as a rising wedge or a falling wedge. But let's just do triple top, triple bottom, double top, double bottom. We'll just look for those 4 types of patterns, right? Triple top, triple bottom, double top, double bottom. So select those, and then we could say, hey, do we want it to be a bullish breakout, a bearish breakout? Do we want it to be, is this going to be a continuation? This really should be a reversal. A double top and double bottom by definition tend to be reversals and stuff. And then do we want to have it completed or, breaking, looking to, it's not completed yet, but possibly, coming in the future. And so there's all kinds of different things we can apply. I'm just going to leave those for now as just kind of both, select everything. And I want to show it because I want to show you, we could scan for this. And how come we're not getting any, oh, 1 day. Hold on, how do we get 1 day? Let's get more time on there. Let's go a month on a day. Let's scan that. Let's thinking. Oh, no matching symbols. What do we miss? Do I have anything else in here? Scan in below SMA. Oh, I wonder if I got to bump this. All symbols intersect with none. Did I bump that? Let's see here. Here we go. All right, so let's take one of these. Now remember, these are looking for double tops, double bottoms, right? Let's take one of these stocks. Let's take CRL. I'm just going to go over to the chart. I'm going to pull up CRL. Okay, do you see the double top or double bottom in there? Or triple top, triple bottom? Well, yeah, but it's already happened. And even if we had emerging, what you're going to find is a lot of times they're not so easy to spot. Another one. Let's grab RGA. RGA. Double bottom. Maybe this was the double bottom. Okay. Yeah, in fact, so these are the lines that the scan did. It said this is a double bottom. Now, generally speaking, double bottom should be horizontal. The fact that it's breaking down a little bit is a little bit concerning because if anything, you'd like the double bottom to be a little bit higher. This is actually showing more strength on the downside. But that's what's looking for the double bottom right there. It does show the breakout. And by the way, if you hover over the purple line, which again is the computer's algorithm looking for it, it will give you this green box up here, which is saying that's where the target area is, and this is kind of the time frame from here to here that it should make it in, right? So yes, you can scan for that, but let me show you something else. Where I'm just saying it's a little bit of a challenge. And so like, we can take any of these stocks we have, we could also go out there and remove this and say, look for patterns and then select patterns. I'm just going to add them all. Watch this. Here's all the patterns. I mean, look what it finds anything out there. It finds any movement on Earth that you want, you'll find, right? And this is where I'm saying, yeah, it's just it has the ability. The effectiveness of it, though, maybe isn't as strong as I'd like it. So we can even go and clean it up and say, okay, instead of doing all of them, like I said, a lot of times it's those wedges that it'll find a million wedges. Maybe we pull out the wedges. We'll leave the head and shoulders in there. The triangles, it finds a million triangles. Anything that can kind of be, I don't know, it finds a million of those things. So let's just remove some of these, hopefully to clean it up. You can see it did clean it up, and that can help. But I just say this, if you are going to use it, be selective, right? you do your own analysis. Let me find one that doesn't have a bunch of lines on it. Like, see, this is what I mean. Even though we really narrowed it down, it's still saying here's a whole bunch of potential moves in there. And so it's just, I don't know. To me, it's not as effective as I'd like it to be. And so, but it's something that can, if you like it, great, take it for what it's worth. But I'm just saying, use the human eye to hopefully, you know, um, clean it up, right? Clean it up. Okay, let me make sure I get through some of these questions. I like the textbook version of what we actually expect to see in the market since they're never textbook. Yeah, well, thank you, BJ. That's the reality version, right? It's like when I'm going through and doing those textbook versus reality, I say, okay, this is what the book says, and this is what we tend to see more often than not. And honestly, when I'm looking to put that together, I'm scanning through, a lot of times I'll do hundreds of stocks and they'll say, yeah, that's not textbook, that's not textbook, that's not textbook. And so it's 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 very rare that you find one that's like, oh yeah, that's exactly how it should be. And now sometimes when you see something that's different, like for instance, this one has potentially a double top on Morgan Stanley. Let's look at this. So right here, right, there's a potential double top right here. Here's support. And we can see where it ran up in here. Ran up, came down, ran up. This is a potential double top. And this is something I bring up in that video that I just created 2 days ago. The double top is this double top? Check this out. Check this out. This potentially, now if this comes down and breaks through support, that's a double top and that's a reversal pattern. And we'd expect it to go that distance, whatever this is here, that distance, as a potential target somewhere in there. There's the double top. Hasn't made it yet. Looking for it to possibly break down. But I tell people, be very careful about getting ahead of the game. And why is that? Because guess what? Someone else might say, what? I don't see a double top in there. What are you thinking, Brett? Come on now. Let's go ahead and delete this. I'm going to remove this one. I don't see a double top. You know what I see? I see oh, come on. Let's draw this. I see an ascending triangle, which is a bullish pattern. And now we're looking for price action to come back down. It ran up, just like we talked about the overall market possibly coming down, looking for it to bounce up, and that's a bullish pattern. So which is it? Is it a ascending triangle bullish pattern? Is it a double top bearish pattern? Is neither. Is neither. It hasn't decided yet. And this is where we have to wait for it to break out and say, okay, now it's an ascending triangle, right? If it comes and bounces off a higher low, ascending triangle. If it comes down and breaks through the prior support, then we got a double top. So got to be very careful about jumping the gun, running in front of the price pattern. Okay, and that's where I'm gonna bring that up in those videos. Please give those a look. All right. Yeah, BJ, good call there. Hasn't broken because it's not a double top because it hasn't broken the line. You got a good job. All right. All right. See, I think I got, them all, and I'm going to be wrapping up here. And so we've covered a lot today. Hey, thank you. Thank you for, you like those short videos. I appreciate that. Appreciate the feedback. So, all right. So what do we do today? So we checked out the overall market. We talked about the overall, market direction, right? We manage the trades. A very important, part and consideration of your trading is being able to manage, deciding, when to go, when to stay. Almost sound like a song, and when to just kind of hold them, if you will. Another song. So let's then we covered a lot of we covered the scans and also some do's and don'ts, kind of thoughts about price patterns. And so there's a lot in there today. So I'm going to leave you with that, and we'll call it a class. Thank you so much for joining me today. I really appreciate it. Again, leave those comments in between if you have some, and I'll look to address those. Again, I check it every day. And if I don't see you in a comment, I'll look forward to seeing you next week. Okay. Thank you for joining me. Have a good one. Mike Fairborn up next. Stick around for ThinkScript with him. Take care.